Welcome to Markets Now. I'm Michelle Rook along with Nick Tsiolis, Farmers Keeper, joining us this morning. And we're lower in the livestock mixed in the grains with feed grains higher. The soybeans are lower. And of course, we've continued to watch headlines here, and the risk off continues due to bank failures in the U.S. And now those have actually spilled over into Europe. And so that is something that the market is really watching, isn't it, Nick?
Yeah, absolutely. And that's why we're seeing a hit in beans again today. They're calling it the first ever social media bank run. So I guess that's the modern age that we live in, but it's affecting a lot of regional banks. And look, like we're told a lot of times, this is a contained issue and everything. And this is so fresh. We really don't know what the effects of this are going to be.
Yeah, so we do have funds who are still long in the soybean market, especially long in the meal market. They're taking
Yep.
some risk off the table here. Actually, we've kind of already done that in the corn market. Funds have liquidated a lot of their positions, so we're back up today with some help from China business again, right?
Yeah, it wasn't a huge sale for those of you bulls out there, but the real question is that going to change China's buying habits and have them keep coming into the market and give us a little bit of pop here? I'm just noticing also that the deferred contracts are just down a little bit. So we've got to weigh all that just with everything else that's been going on with acreage and everything coming in and better drought conditions out there.
Yeah, so what is your thought about additional export business to China or elsewhere? Because it looks like we've gotten down to a price that is starting to stimulate some demand in corn. That's good.
Yeah, that's great. I mean, we've been waiting for a while now to say, hey, is China opening up and everything? Is that going to finally bring them back into the market? While they're still going to be buying beans from Brazil for a couple more months here, it'll be really nice to see if they can actually come in with some meaningful purchases. And maybe that'll affect what happens on the WASD this month too, in terms of adjusting what our outlook looks like for this marketing year too.
Absolutely. And as I mentioned, we've had a lot of fund liquidation the last few weeks here, especially in the corn market. We finally got a commitment of traders report yesterday to kind of confirm that.
Yeah.
It was a big move, wasn't it?
Yeah, and we're always talking about certain government reports coming out and what that means when we mess around with acreage numbers or go back and revise things a year earlier. And look, here we are again with the CFTC being down on their software and having things go backwards, right? That could have probably prepared a lot of producers out there to manage their own risk a little bit better if they knew and they saw that. I always say follow the smart money, and they carry a lot of weight in these markets, and it's hard to stay above certain levels without them holding a lot of contracts. So maybe they'll reverse their decision if we do see China buying a little bit more, and depending on what happens with the stock market here, with all these bank collapses and everything, it's certainly really nice to see that inflation declined to 6% too. Looks like things are kind of working here with what's going on with raising interest rates. I think they probably need to hang out for a little bit and not make any more rate hikes coming up, hopefully for at least a few months to see what's going on in the economy.
Yeah, and with the bank failures that we've seen, there's speculation now that that may be the case. Maybe the Fed will back off here just a bit. The other thing we're watching headlines out of the Black Sea grain deal. Russia says 60 days. Everybody else says 120. Where are we at with that?
Well, I mean, we've got what, and also it's afternoon right now in Europe as it is. So we've got 2.5 days left. It looks like everything that I'm seeing from reports in the media that everybody's just really saying, is it going to be 60 days or 120 days? Obviously, we know that the UN wants 120 days, and Russia's trying to have a bargaining chip to have kick the can down the road half the distance. But there's not a lot of news out there that won't that means that we won't have a deal and that shipments will stop. I think both parties here have good incentive to keep grain flowing. So I'm pretty confident that some type of a deal will be struck.
What else are you watching today, Nick?
I'm watching the weather up in the Dakotas and Minnesota because I'm going to be there tomorrow and Friday visiting producers. There's a lot of concern in some areas of the Dakotas where there's like 100 inches of snow accumulated, just total, multiple layers of freeze. And as that melts off at some point here in the coming month or so or longer, that could affect river levels, and it's not really going to go into charging the ground because there's just layers of freeze in between. So that's a concern. And then I'm also going to be curious to see what happens with the NOPA crush numbers coming out in a few hours here.
You're right. Cash basis levels, how are we doing out there in the country?
A lot of areas are starting to reduce. Keep that in mind, producers. If you're watching basis come down, there is no written rule out there that just because futures come down, that the elevators are going to try to buy your grain by spiking up the basis. That's not necessarily always the case. I personally would not be holding any old crop right now. You really got to be bullish for the market to hold for July, or you just got to be sitting on a pile of cash. And even if you are, I still don't think it's a good idea, because if you're doing it on an operating note at 7.25, you also have the opportunity cost of that going from there to making 3.99% in the money market account. So that's 11.25 gap on your money, let alone it's going to cost you, got to figure 5 cents a month just to be conservative of keeping it in your own bins right now. So the market's come down a bunch and you've got that cost rolling out into a negative carry. You got to be looking at futures going higher than $6 to actually make it worth your while, not to just sell right now.
All right. Well, some good advice. Thanks for this summary this morning. Nick Tsiolis, Farmers Keeper, and that's Markets Now.